Good afternoon. It's September the 21st, 2016, and time to wrap up our trading call today. We start off this morning wanting to sell 42s to 45s. That was our sell zone. You can see that we caught it very, very well. Had a 35, 37 buy, and then a 30 to 32 buy. So our 35 to 37 buy was in this area right here before the day session opened. Our 30 to 32 area hit right here. So again, for those of you that are looking to extend your range and to get more than 3 points plus or minus on a trade, this is the way to do it. And you have that information in your hand by 7 a.m. usually, Central Time, well in advance of what happens. Very, very quiet trading. This trade right here we talked through, 1 to 2 points. These trades right here took forever to develop. A little bit faster, and finally this retest failure right here takes off and comes down. Retest failure off the bottom with 2 bars in between, which is what we like. Retest failure right here. Then comes the FOMC news, and our guess is that if they left things unchanged, the market would rally. The hawkish statement was built into it. If it happened to be dovish or benign, it would rally off of that. And right now it looks like things are pretty much unchanged. Another couple of good buys right here, retest failure. So the trading that the software identifies, that our methodology identifies, continues to work out as planned. Not every trade's right, but it will make you money if you take the trades. And that's the hard part, taking the trades. Outside day implies trading range tomorrow. As we've said since the summer, that we will see new contract highs before the election. I'm still of that opinion. And here's the day session with perhaps a move out of the middle in A period, pretty close. And we're up over 2150 and pointed higher. If the market were to close right here, right now, a little bit higher, so we'd be selling 54s, 56s, sell 1. Picking up this high volume area, 59 to 61, sell 2. On the buy side, on the breakout, 46, 44, buy 1. And then buy 2 would be 40 to 42. Lots of news tomorrow. Jobless claims 261. Chicago Fed National Activity Index plus 0.15. FHFA housing plus 0.4. Existing home sales 5.44 million. Natural LAI up 1/10. KC Fed. Last was -4. I'd be looking for a negative number. So the first news focus will be jobless claims, number 1, followed by existing home sales, number 2. Treasuries were higher. They were sold into this FOMC announcement off the Japanese twist. Japan is twisting, but they didn't add any money to their QE program. So the bad news was built into it. So a relief rally, short covering rally is probably what we're facing. Outside day implies trading range. So if we can't get through this 30-24 area, 131 even, this market can sell. If we put all of this together, definitely a B with resistance at 30.24. Looking at the F2 screen, a little bit stronger, going to show contrary information. Your L period, how can bonds and the E-mini rally at the same time? Because Fed's keeping interest rates low. Fed will continue to print money at the same rate, which is why gold is rallying. So right now, 23.27 has served us pretty well. 31 to 03 for sell 2. On the buy side, 13 to 17, 5 to 9. Looking at gold, the 30-year. Okay, we liked this one long coming into today into the FOMC because it's been so heavily sold before. We didn't change our mind, so the long side's where we are. Resistance is the buck to 04, 7 to 11, sell 1. It's going to be pretty easy to get back up to the 68 area. We'll make 19 to 23, sell 2. Support is 16 to 20. So 9 to 13 is buy 1. And then 1 to 5 is buy 2. My feeling is that we probably have a couple of days of at least of a relief rally minimally. Gold. Outside day is 1340 area, then 1350 would be the two obvious places to stop. So sell failure to take out 1340, 42. And then 45, 47 for sell 2. On the buy side, 30 to 32. And 25, 27. Looking at crude, we've had two really very good inventory reports, the APIs and the EIAs. We have OPEC meeting the 26th to the 28th. There'll be some rhetorical announcements and trying to stabilize prices, but it's a fight over market share, and without Iran it's not going to happen. So this screen says find a place to buy it. Definitely dealing with a piece, so a little bit higher in London, 45.75, 46 sell 1, 46 and a quarter, 46.50 sell 2. On the buy side, broke it out from 45 and a quarter, so 45, 45 and a quarter buy 1, 44.50, 44.75 buy 2. I dealt with a lot of hedgers in crude oil back when I had an active brokerage business, big ones, and they traded futures against their cash positions. And if cash always went into the cash settlement and cash delivery, but they would see a price that they thought was an anomaly or out of line for the rest of, based on history and where they thought the market should be. and then they would sell into it. So they were basically pricing or locking in all the way up. If they made a mistake and were clearly underwater on it, they delivered in. It didn't bother them. That was just, we priced that production too low. If they could trade around it profitably, which is what they did most of the time, because it's always cheaper to settle cash on the cash side and settle futures on the future side, then they had trading profits. And it gave them a lot of staying power. They just they didn't back away from fundamentals. They didn't panic out of positions. Euro, lower high, lower low, find a place to sell it. And it's come off the lows, and right here we are in L periods. So I think 1240 to 50 is probably a reasonable sell. And 75 for sell 2. Don't think we can take out and hold this area right there. On the buy side, 112 even. And then 1275. Took a while to get there today, but 1175, but eventually we did get there. And there you have it for the September 21st, 2016. See you bright and early in the morning. I'll come back for questions right after I get everything buttoned up and start compiling.